are looking live at a daily chart of the Dow Jones Industrial Average. And you can see the Dow Jones is trading at all-time highs here. If I go to the weekly chart, it'll show you kind of the move we've had off of this 32.3 level up to over 38,000 now. A nice, I don't know, 17% move, which is a lot for these 30 stocks, which I don't believe is a real good indication of the stock market, 30 hand-selected stocks. But you can see it has been flirting with the 38,000 level since it made that move on Martin Luther King week when we came back, had a real nice move. Hit 38 on January 22nd, 38,109, which is exactly where it closed on so the 22nd, which was Monday. So it closed right there on Friday, 38,109. So it was flirting with 38. And now we're dating here. We have a date, 100 points above 38. So maybe we'll get married. Anyway, the Dow Jones 30 stocks looking good. What's more bullish than an index trading at new highs? So S&P 500 traded at a new high on Friday, then just pulled back into the close. You can see that 4,906. So this is flirting with 4,900. People were thinking that 48 would be a top, double top, but it just wants to charge higher. It was up 1% last week, 1.06%, and above average daily volume, weekly volume. So the S&P, once again, new highs, obviously new highs are bullish and it looks good. The Russell, not so much. I mean, it had a good week last week, up 1.75%, but it had a 4-week drawdown, which pulled back to a moving average. And you can see it's just consolidating, trying to move out of this, stage one, multi-year consolidation period. So this is probably going to take some time, but, it's kind of tethered to the rates a little bit. And if the rates come down, this should do better. They don't have the earnings that that some of the Nasdaq or S&P stocks certainly have. And this is the Nasdaq weekly chart. It was up almost 1% last week, 0.94%, 144 points. We'll take it. Closed at 5,455. Volume was a little slightly above the average weekly volume. If you go to the daily chart, you can see that it made a nice charge into that Martin Luther King week. It came in after it was a 4-day week, and then last week rallied up to 15,629. Just pulled back the last couple of sessions. Thursday was actually up, but can't make a higher high. So we're looking for that next week. It stands to reason that people would be cautious, investors would be cautious ahead of this week's earnings with Amazon and Meta and AMD and Microsoft and Starbucks and all the biggies. And I'll get to that a little later, I believe. I hope to anyway. I look at stocks, not indexes really. I mean, I just go over that for a kind of just a background to see where we're at. I believe that we were going to have a rally coming into the year because all of these charts were set up on these Super 6 stocks. Apple was one of them. You could see a very distinct cup with handle pattern, and it's been up the last 3 weeks. If we take a look at the daily chart, it was just up 0.5% last week. But if we take a look at the daily chart, you can see it's a little more elongated there on that handle, and actually the handle's a flat base. You can see the cup with handle, the handle's a flat base. Just waiting for earnings here on Thursday. Like I said, this is going to be a big week, and market's probably cautious ahead. But it didn't stop Microsoft from making new highs. I'm talking about this one as well. Just because charts are set up doesn't mean they're going to break out and move higher. But this time it worked out ahead of the earnings, which always gives me pause for a cause here. This is your setup here, your little sideways action, which is like a handle. It turned into a flat base for 6 weeks, and now the last 3 weeks is just ripped higher off that moving average there. You can say 366 to 403. So now this thing's dancing with 400, and we can see if they're going to flirt, they're going to date, or they're going to break up. We'll see after earnings on Tuesday. The 30th, Google is another stock that was set up to break out, and it certainly did. You can see once again, that cup, it consolidated. These things have been consolidating for months. So really, it's no surprise that they get some investors and push higher as the new year begins. So This is not a surprise. I mean, just because the chart's set up doesn't mean it's going to work out, but it has this time. Meta, another one that was consolidating, like last summer, and then when the Nasdaq was pulling back, this thing was just kind of holding its ground. And since we started to rally there off that follow-through day on November 1, which Meta was what at 301, now it's at 394. So if you bought Meta on the follow-through day, I think you'd be pretty happy. Amazon, another one reporting this week, along with Meta and Apple. And so these are going to move the markets, folks. No doubt about it. This is Amazon daily chart. You can see, this one, pulled back. It broke out and then pulled back, went up to 155, then pulled back to its 50 for the first time, and now is ramped higher. But you could see why. I was bullish coming into this year. These things are all set up, and now pulled back maybe the first week, but the last 3 weeks, they've been really strong. Amazon up 2.43%, and the last one of the Super Six is NVIDIA. Yes, I know I'm omitting Tesla because it's just not worth looking at that stock right now. Nothing, bad. I mean, sometimes stocks are good and sometimes stocks are bad. Right now, Tesla's in a void. Anyway, NVIDIA, another one that, is set up for a long time. This is back in August now. It was a 502, consolidated for a long time. I bought it on that rip that Monday morning when it ripped higher. It fought right through its pivot point. And it was the first thing in the morning, and it was $500. Now it's up $600. So, when you get a 20% move on a stock like that, probably wise to take some profits into the earnings. They don't report till the 21st, but AMD reports on Tuesday after the bell. And I don't know what AMD can say to make this stock go any higher. It's a weekly report. So I'm going to look at the weekly chart. We picked this thing up just about 1010 as it broke above its downtrend line. And then we bought again, maybe a 10% buy at 110 and maybe a 3% buy at 120, and then like a 2 or 1% buy at 150. But there you could see the breakout there. Then it went 3 weeks tight, blasted ahead. And I mentioned this 1 week where it pulled back 150 area. Right there's your pullback to the moving average. And it's just blasted higher ever since. You have to acknowledge the volume that's coming into this stock. This is a 4-day week after the Martin Luther King holiday, and the volume has just been crazy high. So institutions, they do a lot of due diligence. They spend a lot of money before they invest in stocks, and they know something's up with this company. I don't know if it has new customers, new clients. It has new products. So maybe, these new products are attracting new customers. But you could see on the Martin Luther King week, which is a 4-day week, it still had 69% above weekly volume on a 4-day week. Hello. And then last week had the highest volume it's had since, in the bear market in the spring of 22. So it's been nearly 2 years since it's seen this kind of action. And something's up with AMD. But like I said, it's up, from 90, 93. Yeah. And then it broke above the downtrend line is when we bought it. But anyway, it went to 180. So that's a heck of a move for a stock like this. But I just got to acknowledge the volume. Somebody likes this stock. These are institutional footprints. They're buying it. So I like to follow the institutions. I did trim some on Friday because I don't want to be heavy into an earnings report. Even if they report stellar numbers and she says, that their addressable market is greater and greater and they raise guidance, I could still see a scenario where it just pulls back to the 10, on a buy the rumor, sell the news type of action. But it might be an opportunity to, for new investors to get in if it does sell off. I just cannot see this thing going much higher here after that. That's like a parabolic move there. Anyway, AMD, I like it. I own it. I'm looking forward to what Lisa has to say on Tuesday after the bell. But you can see this move is pretty crazy. The volume is really crazy. Something's up here. I know Tesla has their chips in their Cybertruck, but there's something more to it than this. Anyway, because I know it, everybody knows it. Okay, I'm going to go to some of the other semiconductor names besides NVIDIA and AMD. They've obviously done well. They're both up more than 20% in 2024. This is Broadcom, the ascending base pattern. Broke out and then just pulled back. So maybe, AMD will do the same thing, come back to its like think it's right there at its 80 EMA, but maybe it'll come back to its 10 and find support. Just another strong stock, one that I like, and one that's reporting at the end of February. So you have some time there with that one. And then MRVL, I have this one on the list because it broke out. I've got to go to the weekly. This is a weekly report, but you can see the long period of consolidation here. And then it broke out. It had 3 weeks tight, traded tight within the base, broke out higher. It looked like it was going to move higher, then pulled back to a pivot point. And that is not the end of the world. A round trip, pretty common, especially with stocks that have been consolidating for a long time. But it just pulled back to its 10. So to me, this is an area of interest. Now, maybe we get rotation out of the semiconductors next week and into a new area. But if not, if institutions stick with the semiconductors, this one is likely to bounce off that support there. Anyway, I'm going to move on to the software names. Just go to a couple software names that are, showing strength. This is, a move that we do not ignore here, up 28% on 648% above average daily volume. Earnings beat, and obviously institutional investors or short covering in this stock, but you can see it's been consolidating for a long time. Base on base pattern now finally moves higher with the volume up 26% in a week. So Appfolio, definitely one to watch, folks. Another one that I'm watching is OTEX. This is in the computer software database group. And it made a new high on Friday, I believe, but it's still consolidating within a base. So I know a lot of stocks are extended, and I know I've shown a lot of stocks that are extended, like CrowdStrike and Palo Alto Networks, but some of these are still setting up in bases. And this is one. So this is just, I just want to show, it's showing strength, made new high, but it's still consolidating in this long base. And that's why we look at weekly charts, because even though it, made a new high and it looks extended on the daily, on the weekly, it's just starting to emerge out of a base there. And the last one I'm going to show on the software, because I'm going to get to them a little later, is the Giga Cloud. This one, it was ramping higher, and I was telling folks, up there at 26, and don't be chasing performance. And it came back down below 20 at 18, just kind of traded sideways, really wild stock. But last week, ramped higher up to 26.28. So it's near that old high there of 26.45. A good week for Giga Cloud. It was up 28% with strong volume. So definitely one to watch in the computer tech services group, which is a strong group. All right, I'm going to move on to the drug stocks, because drugs are going to be in vogue this week with Eli Lilly and Novo Nordisk. But anyway, this is come on, go to iPoint. Marcus Smith, you have to work for this. iPoint, Marcus Smith's not going to work. Okay, iPoint, thank you very much. Okay, so it's a weekly review, but I just want to show the daily because it gapped higher. And this is why we pay attention to gaps higher. The low was 17, the high was 24 this day. So that's a wide range, right? So it just kind of consolidated here. And then on Friday, broke higher to 27.09. So nice 18% move on Friday. So we'll take that every time, right? Come on. This thing's not working. So this is going to be a pain, huh? All right. I'm going to go to another stock here. Hopefully it'll move it. Okay. NBIX, you can see the big cup with handle pattern in the breakout, making new highs. This is Neocrene Biosciences. You can see the medical biotech group is number 3 group. So they've been acting very strong after, like 3 years of consolidation. And this is one of the leaders in the group here. This is Neocrene, and just made a new high on Friday. And so you talk about extended stocks, there it is. But if you're a trend trader, I mean, this is a beautiful trend. Buy on, the bounces off these moving averages, and that can be a profitable strategy for if that's your style. Merck is another one. I think they report earnings. Yeah, same as Apple and all the others on Thursday. I believe they're in the morning, but Merck has been a beast for a long time. They have a lot of cash. I wouldn't be surprised if they made some more acquisitions, but you can see a very pronounced cup-shaped pattern, 3 weeks tight. That's textbook stuff right here. I wouldn't be surprised if they made an announcement on Thursday. This stock pops higher. It's definitely one to watch. Definitely one that'll be on our list, with the caveat that, it has earnings coming up, and earnings are always a crapshoot. So maybe you want to play them with maybe some options down the road. But anyway, that one looks good. And then Lilly is another one that is set up in a base. I talk about stocks that are extended. This is not. This one has been consolidating since October, so it didn't participate in the rally, and it's just been trading sideways, which is kind of strange, because it is a leading stock in this group. So I think it's waiting for some new data points. I'm going to get to that in a little bit. Anyway, I mentioned that we could see a rotation out of semiconductors or out of software. Maybe it goes to oil and gas. This is Phillips 66, made a new high on Friday. They report earnings on the 31st. So this is going to be a busy week. And you just want to keep an open mind. These are not stocks that I really care for, but if they're going to be set up in bases and they're going to trade higher, I want to participate in this. This is a PBR. They have a nice yield. It says 16%. I don't know if it's that robust, but definitely a nice move last week, up 8%. And they, this is a big, slower moving stock. They don't report earnings till March. You don't have to worry about that. And the last one in this group is Weather Forward. I do have this on our ready list because it made this, cup-shaped pattern, and then it, cup with a handle, then it just went to base on base, and then it failed below the 50. Now it's rallied back through the 50. And to me, I don't know if you can get it below 100. I think this will eventually prove to be a decent area. They report earnings on February 6th. If we go to the weekly chart, you can see their sales growth profile and their earnings growth profile. So this is a machinery equipment stock, a 7 billion market cap. You can see the long period of consolidation here. It's just waiting to make a move. Okay, I'm going to go to retail. PVH, Philip Van Heusen, yeah, apparel and clothing, yeah, dress shirts, sportwear. Who would think? Look at this move out of this base. This is one of the stronger groups too. Apparel clothing, apparel shoes is good, higher, but apparel clothing is not. So this is definitely a leader in the group. You can see the move higher, and now just a sideways action. That's kind of like a flat base. So we'll give it a little more time, maybe one more week, and keeping an eye on PVH, which is the old Philip Van Heusen. And another one that I have to point out is Deckers. Deckers is just a monster stock. If I go to the monthly, you can see this was a less than $1 stock, 85 cents to $760. One of the greatest winners of this century. And nobody talks about it. Nobody cares. It's got the Uggs Hoka brand. They report again on Thursday. I don't know what they could say to make a move like it did last time, but it had an 18% gap higher back in October. And this is why we pay attention to the gaps higher, because that day, it closed at 576. Now it's at 767. So did it give us a chance to get in? Well, it sure did. It pulled back to its 50 there at 651 on January 5. So you had to be quick, and it went from 650 to 750 in a nanosecond. Anyway, I don't know what they can say to make it go higher on Thursday. I would expect some sort of profit taking here, but definitely a strong stock and a big winner. And I would not be, I'm not going to be buying. I'm not interested in buying stuff that high. I am interested in this one though. Why? Well, because it's formed this base and just traded sideways back to moving averages. I know it went into the mid cap 400, from the S&P small cap 600, big deal. I don't care about that. What I do care about is it formed this base and made a massive move. Couple areas, of interest, as it pulled back to its moving averages on the way up. But this is more than a year of appreciation. Now it's formed this other, pretty good sized base here from September, and we're, near February, and it had a 3 weeks tight and pulled back recently. This week, the last 3 weeks had another 3 weeks tight. Maybe it'll pull back to that 50, but maybe not. They report earnings on February 6th. They're taking mind share and market share. I'm pretty confident that ELF is going to report a strong quarter. I'm not saying that the stock's going to go higher, but the chart certainly indicates that it might because of this setup. And, stocks don't go up because of their charts. They go up because they have sales and earnings growth. And you can see that ELF has this, 49, 78, 76. I don't expect 76% sales growth, but they might. Triple digit earnings growth. I mean, if they continue with that very long, I mean, this is going to go way higher. Their comp here is 146 million, and they're expected to come in at 240, I believe. So they might have, who knows? Maybe they can come in even with 280 or 290. They bought a skincare stock company, Natarium, so they're expanding into new demographics into Europe. They're expanding their product line with skincare, not just eyes, lips, and face. I think this thing has a long runway, despite the market cap, of 8.6 billion with 1.2 billion in sales. We're just going to have to, that's the way growth stocks work until they stop growing, and then you have a problem. But anyway, that's it for ELF. I got to get to some of the leisure stocks that you're making new highs, showing strength. This is Hilton Hotels, leisure lodging. This is a trend that, trend traders dream, right? A breakout. Well, you missed a breakout, buy it when it bounces off the moving averages. Bounce. You can see tons of bounces here that you could have had way back. There's a nice bounce on this day here, which was December 1. It was still down at 168 there. It kind of pulled back here at 178, bounced nicely. Now it's at 192. So play the bounces on the trend until the trend bends at the end, and that's the way trend traders should approach that. Or Airbnb. This is not a stock that I really care for. I don't care for their business model, but I have to acknowledge it. It's setting up in a base. The group is doing well. Leisure. It had real strong volume on Friday. It advanced nearly 7% last week. You can see the consolidation. So I'm a sucker for stocks that are consolidating and not really chasing performance. Speaking of which, Netflix broke out of a base last week, up 18%. Strong move. Leisure Group had that move on Wednesday. The high was 562. So that's your trigger. It traded above it. 63.46 was your trigger on Friday, and then traded 579 on Friday. So if you're playing options, and buying weekly calls, those things paid last week. Anyway, I'm going to get to some stocks. I mentioned that many are extended, some are not. And if you're interested in HVAC stocks or to set up in bases, this thing, I had this way back at 150 last summer. And it broke out and made this strong move to 192. Then it sliced its 50, and all it did was form this cup with handle pattern. This is a slow mover, just a grinder. But you can see the sales profile. 20s and 30s will take it. 60% earnings growth. I mean, maybe not for everybody, but their report on February 22nd. But I kind of like a couple of these air conditioning stocks. Carrier. This was a spinoff. But it's been really strong since its IPO. You can see on the weekly here how it emerged from this stage one base, made a strong move. So that's what I look for, stocks that have the ability to make strong moves, consolidate, another strong move, now consolidating. Who says it can't make another strong move above the 60 level? So anyway, that's what I look for. That's tight trading action within the base, hugging the 50. To me, that's good actions, not extended. You're not chasing there. Elastic, this is another one. Once again, this is why we pay attention to these gaps higher. Gapped higher, the low was 97, the high was 111. Consolidated in a base, the flat base pattern, pulled back to its, what is that, the 21, and then a gapped higher, looked like it was going to break out, then it faked out, that's a fake breakout, then pull back to the 10. So this is not easy, but that looks like a nice bull wedge pattern. It was down 2% last week. Yeah, I kind of like that pattern there, and I actually might pick this one up here at the 10. So anyway, we're going to look and see how the action plays out next week, but that's definitely I don't consider that too extended. It's another software name that I like. We've had on our ready listed MC stock charts is AppLovin, definitely consolidated for a while here. It was at 44 back in September, so it's been nice 4-month consolidation now. getting some volume, might want to make a move here. Definitely set up in, cup with handle, up 7% last week. Earnings on Valentine's Day, so maybe we can show it some love on Valentine's Day. Datadog, this one has been consolidating forever and a day. So this one will wear you out. You can see the big water park slide, the Mount Everest ski slope coming all the way down, consolidating in a base, and made this move from 80 to 120, which is a nice 50% move. Looked like it was going to break out. Whoops, did the old okey doke. Pull back to its moving average here on, well, last week, Tuesday, Wednesday, Thursday. There was some note out that AWS was slowing, which I think is BS. But anyway, my last one that I'm going to show you, then I'm out. Adobe, another one, big market cap stock, trading in a base here, obviously shown the ability to move higher. It broke out of this stage 1 base, moved higher. Now it's just been consolidating. So I wouldn't be surprised to see Adobe move. They don't report till March 14th. That's it for me. Thank you for watching. Except for I lied. I have one more thing, and that's Novo Nordisk. Now, I mentioned Eli Lilly earlier. These two did not participate in the recent rally. They report on the 31st, which is Wednesday morning. They report early because they're, based in Denmark. So, they have a problem where they cannot meet demand. So the thing that they need to talk about is how they're building out their manufacturing plants and process. I know they bought plants all over the world, South Africa. They're building one in North Carolina. So their issue is supplying their demand. And so Novo is going to report. I'm sure they're going to report strong earnings. I don't know how the stock's going to move. Maybe you could play it with Eli Lilly, because you never know, what they're going to say. But, 24, 37, 39, they have a nice steady increase in sales growth. Their EPS growth is phenomenal. Like I say, you never know on earnings which way stock's going to move, but this one is set up in a base, as is Eli Lilly. And I believe one of them will move higher with the data. And Ken Langone says Lilly's going to be the first $1 trillion drug stock. I'm not going to argue with him. So anyway, that's it for me at MC Stock Charts. We never give up. Thank you for watching. Have a great weekend.